Let's be real. Crypto is often a circus of hype, jargon, and wild promises. It's a world where fortunes are made and lost overnight, and where every new project claims to be the next big thing. But beneath the noise, every now and then, something truly different emerges. Something that makes even the skeptics pause and pay attention. Right now, that's the Pi network. Unlike most coins, Pi didn't launch with a flashy ICO or wild trading frenzy. Instead, it quietly built a massive community, one tap at a time. Tens of millions have tapped their phones for years, waiting for Pi to wake from its long hibernation. From students in dorm rooms to shopkeepers in bustling markets, people everywhere have been mining Pi, hoping it will one day become more than just a number on their screens. All eyes are on November 22nd, 2025, a date whispered as the start of Pi's final countdown. It's circled on calendars, discussed in online forums, and debated in group chats across the globe. This isn't just another empty promise, it's a pivotal moment that could connect Pi to global finance for the first time. If successful, it could open the doors for millions to participate in the digital economy, regardless of where they live. For Pi's pioneers, it's the moment of truth. Was this a revolution, or just a massive social experiment? Years of patience and hope are about to be put to the ultimate test. The buzz is real because this date could finally answer the question: is Pi real? Or is it just another digital mirage in a desert of broken crypto dreams? Until now, Pi's value has been theoretical. No trading, no selling, just a closed garden. For many, it's been a waiting game, with no guarantees of a payoff. But the events set for November 22nd are about bursting that bubble, connecting Pi to real money, real banks, and real consequences. It's about finally letting the world see what Pi can do when it's unleashed. The stakes are high, not just for Pi, but for the entire crypto world watching to see if a mobile-first project can actually deliver. If Pi succeeds, it could change how people everywhere think about digital money. The plan? A series of technical activations to turn Pi from a closed network into an open one, unlocking new possibilities for users and developers alike. That means audits, price, stability, and a decentralized exchange. These aren't just buzzwords, they're the building blocks of a real functioning economy. For millions, this could be the day their digital coins finally have real-world value. The world is watching, and soon, we'll all find out if crypto's sleeping giant is truly ready to wake up. Before trusting a new financial system with billions, you need proof it works. That's where audits come in. Pi's recent comprehensive audit and global GCV financial report are like its final exam. The results? Reportedly, Pi's ledger is secure, stable, and ready for massive transactions. In crypto, a ledger audit means every transaction is verified and tamper-proof, a foundation of trust. The GCV report confirms Pi's economic model is stable and ready for real-world use. This isn't just about tech. It's about building a working economy. A stable value means Pi could be used for coffee, not just speculation. These audit results signal the end of Pi's quiet development phase. The core team always said they'd wait for perfection before launching. Now they're saying, we built a secure, scalable, and sound financial network. It's the green light for the community and the world. Pi is ready to prove itself. Let's talk about the number every Pi user knows, 314,207. It's a figure that sparked endless debates, wild theories, and a fair share of memes across the Pi community. But what does it actually represent, and why is it so important to everyone involved in the Pi network? That's the reported Oracle GCV, Global Consensus Value, for one Pi coin. In other words, it's the value that the Pi network's Oracle has set as the official price for a single Pi, at least within the network's ecosystem. Yes, $314,207 per Pi. It sounds wild, and it's meant to be. This number isn't random. It's intentionally eye-catching, designed to make people stop and think about what Pi could become. The idea? Anchor Pi's value high and stable from day one, avoiding the chaos of typical crypto launches. By setting such a bold value, the network hopes to prevent the usual roller coaster of price swings that can scare off new users and investors. Instead of wild speculation, Pi wants a predictable economic environment. The goal is to create a sense of trust and reliability, so people feel confident using Pi for real transactions, not just as a speculative asset. The Oracle enforces this value, across the network, so transactions between users and merchants are based on it. This means that whether you're buying a coffee or a concert ticket, the price in Pi remains consistent and fair. For users, this means their Pi isn't a lottery ticket. It's a stable asset within the network. You can plan, save, and spend with confidence, knowing your Pi's value won't suddenly vanish overnight. But can this work? A consensus value is only as strong as the community's agreement. If enough people believe in it and use it, the value holds. If not, it could unravel quickly. The real test comes when Pi meets the open market, where supply and demand rule. That's when we'll see if the anchor holds, or if the waves of speculation take over. Will the network honor the anchor, or will market forces take over? It's a tug-of-war between vision and reality, and the outcome is far from certain. Pi's strategy: build a self-sustaining economy with a high, stable value, and let that strength set the terms for the outside world. If the community can pull it off, it could set a new standard for digital currencies. It's a bold global experiment. The world is watching to see if this new approach can succeed where so many others have failed. If it works, it could change how crypto launches are done, inspiring other projects to rethink their strategies and focus on stability from the start. If not, it could be a cautionary tale, a reminder that even the boldest ideas need more than just numbers to succeed. For years, Pi has been like a city walled off from the world. The open mainnet launch is when the gates finally open, but to manage the flow, Pi needs a DEX, a decentralized exchange. A DEX lets users trade directly, peer-to-peer, without banks or middlemen. For Pi, the DEX is the bridge to the outside world, enabling trades with Bitcoin, Ethereum, and more. Technical signals point to a DEX launch around November 20th to 22, 2025. The DEX and open mainnet are a package deal. One is useless without the other. The DEX brings liquidity and price discovery. The open mainnet brings global connectivity. Once live, pioneers can finally trade Pi and its real-world price will be tested. This is Pi's leap into the open market. Now, let's talk about ISO 2022, a global standard for financial messaging. It's the universal translator that lets banks and blockchains talk to each other. Pi Network is reportedly 100% compliant with ISO 2022. The global banking system is moving to this standard with a final deadline in November 2025. Pi's activation is timed to match this shift. No coincidence. Compliance means Pi could, in theory, interact with thousands of banks worldwide. It joins an elite club with XRP and Stellar, bridging crypto and traditional finance. For users, this opens up new possibilities: instant, low-fee transfers from Pi to bank accounts, or merchants accepting Pi and settling in local currency. ISO 2022 makes crypto practical and regulated. Pi isn't trying to burn down the system, it's aiming to be a next-gen partner. The future of money could be interoperable, and Pi wants in. Tech is great, but adoption is everything. Pi's real-world test, people actually using it, especially in China. Thousands of merchants are already accepting Pi for goods and services, betting on the GCV. Videos show people buying cars, meals, and electronics with Pi. This grassroots adoption proves Pi can be a real currency, not just a science project. Unlike XRP and Stellar, which started with banks, Pi built a massive user base first. Now it's leveraging that network to attract merchants, and, eventually, institutions. Pi's superpower is its millions of users, a population the size of a country. Merchants want a currency people already hold. This bottom-up movement gives Pi a head start over other cryptos. It's built its army first, now it's ready to march. Let's address the elephant in the room: skepticism. Pi's long enclosed phase and lack of open trading have fueled doubts. Critics question the $314,200 GCV. Can a coin with no market history really be worth that? Once tradable, will selling pressure crash the price, no matter the anchor? Regulatory hurdles loom large. ISO compliance isn't a magic shield. Trust from institutions and regulators takes more than tech. It takes transparency and a proven track record. Ultimately, Pi's success hinges on trust. Can the team, the value, and the network deliver? Faith is powerful, but not enough in global finance. The next few months will be the ultimate test. The countdown ends, the big day arrives. What next? The first days after launch are critical. Does the DEX work? Is the network stable? Technical glitches could shatter confidence. Next, watch transaction growth and the GCV. Will people actually use Pi? And will the price anchor hold? Real-world adoption is key. Will merchants and brands join in? Announcements of partnerships and new apps will show if Pi is building a real economy. Finally, look for signals from regulators and banks. Official recognition would be a game changer. The world will be watching to see if Pi can turn potential into proof. Pi's moment of truth is here. After years of anticipation, the world is watching closely to see what unfolds next. Years of patient development and a global community have led to this. People from every continent have contributed, united by a shared vision of a new kind of digital currency. The strategy is bold: a bottom-up launch, a high-value anchor, and a plan that challenges the status quo of how currencies are born. The timing couldn't be more critical, aligning perfectly with new global finance standards and a world hungry for innovation. If it works, Pi could set a new model for launching digital currencies, stable, accessible, and designed for real-world use. Imagine a currency that's useful from day one, not just a speculative asset, but a tool for everyday life. The potential for global impact is huge. It could empower millions, reshape economies, and redefine how we think about value. But the risks are just as real. Skepticism, technical hurdles, and the challenge of building trust in a skeptical world. And then, there's the unforgiving open market, where fortunes can change in an instant and competition is fierce. The line between revolution and delusion is thin. Every decision now carries enormous weight. The world is about to find out if Pi's slow-cooked strategy was genius or just a long wait for nothing. The stakes have never been higher. The final countdown isn't just about tech. It's about activating a community, rallying people to believe in something bigger than themselves. It's about testing a radical idea, one that could change the way we interact with money forever. Whether Pi becomes a case study in brilliance or a cautionary tale, its story will echo through the world of finance and technology. It's forced us to rethink what money can be. The giant is stirring, and the world is holding its breath. Let's see what happens when it stands up. The next chapter is about to be written.